Good morning, good afternoon, and good evening, wherever you are in your beautiful country. This is a new episode of Pair Trade Finder Pro, where we are analyzing the pair AJRD KTOS, which are the tickets for Aerojet, Rocketdyne, and Kratos. This is trade of the month of June, and the signal was triggered on the 9th of May, and the exit 2nd of June. This is what the signal was specifying, but we're gonna see in this video, as probably what you need to take with you, that maybe the exit should have happened slightly earlier, because I always say to myself, when the trade is clearly on your favor, take the money and run. So with that, we go to our cheat sheet, and as we always do, very first thing to do is check news. So in order to check news, I like to use the NASDAQ web, where I can see that for Aerojet Rocketdyne, there's nothing relevant on the 9th of May that could affect heavily the trade. And if we go to Kratos, apart from the fact that on the 5th they presented earnings, which is not a minor, a new, around the 9th there's nothing relevant enough in order to have a big impact. Of course, earning release is a big one, but what I observe here is that it did happen 5th of May, 10 o'clock in the morning. The market had 3 days in order to absorb the earning news. And once again, if I go to the charts, what I observe is that while the signal was on the 9th, the earning release was on the 5th, there was like 3 trading days in order to stabilize the data prices. So with that in mind, I go to my cheat sheet and mark check news with a green, because there was nothing relevant apart from the earning release, that I will mark it here with a yellow. So even if there was for Kratos 3 days of trading market in order to absorb the news, the earning release news, I will mark it as a yellow just to be conservative. Dividend dates is the next one. Dividends for AGRT were on the 9th of March, and Kratos do not pay dividends to the best of my knowledge. So this is clearly a green. Per momentum, let me go to the charts. Per momentum, while the media was trending down, the signal happened on the other side of the trend, which is telling me that the reversion to media probabilities are pretty high. So that is why I'm marking the per momentum box with a green. Aerojet chart, support and resistance. Let me go back again, and in the plus minus chart, what I see is that when the signal was triggered at 2.78 standard deviation, that is kind of resistance level for the signal. So that is a green in that sense. Standard deviation shouldn't be above plus minus 35, because that is probably an event affecting. We already analyzed that that was not the case, and even more, the standard deviation was 2.78, and it was built in almost 4 to 5 days, including the Q1 earning release of Kratos, but we have already analyzed that market had all these trading sessions to absorb it. So with that in mind, this is also a green for me. RSI chart is quite interesting because it is presenting a clear divergence. So if you take a look to the ratio chart, what you see is the uh, the chart growing up quite fast. Let me zoom it for you. And at the same time, while this is growing up, what you have is an RSI that from this peak here, which is 91%, it is beginning to trending down. So this is a clear divergence that we want to leverage because we like to see these facts because we think improves the possibilities of a reversion to media in our favor. So RSI is okay, it's a green. Correlation and co-integration, go back again to our backtest history, and we see that co-integration is 0.93, quite good, and correlation is almost 50. So both parameters are very well balanced and within our limits. So because of that, we mark these two boxes here with a green. Volatility, on the other hand, is very high. Volatility when the signal was triggered was slightly above 4%, which is in our limit, and it was growing. So because of that, we mark volatility with a red, but we understand the reason why volatility is trending up is basically because we have this Q1 earnings release that was probably adding up to the volatility of the pair. In any case, to be strict with our methodology, we mark this in red and go to the next one, which is CAGR and drawdown. So we go back to our backtest and we see that the drawdown is below 20%, it's almost 12, well below our limit, which is 20%. But the good news is the CAGR is 18.5%. So that is almost double than the drawdown. So that is a very good relationship in between these two parameters. So clearly, this is a green. And let me show you one more thing that I think is relevant, which is the percentage of winning trades was 100%, and the average net profit per trade is more than 500. That is substantial. That is figures that for 5,000 legs are quite impressive. Average days for the operations are 15.2. That is slightly above what we like to see. We would like to maintain ourselves in the range of 12 to 14, but well, that is not that much difference. So with all that in consideration, we could have go for this trade. But now let me go back again to the pair charts and show you what is the important conclusion of this video, in my opinion. You see that the entry was at 2.78. So if we apply the 1.7 rule money management tip explained in detail in the previous video, we should have exit on the 27th of May. Because at this point, the 1.7 standard deviation rule was accomplished. That would have given us a profit of almost $500. And I personally would have taken the money and run at this point, clearly. The reason is pretty simple. You never know what's going to happen next, and you never know that this good amount of money you have made in the trade is going to revert back. It was not the case. It was still growing until 700, and you may argue that you're leaving $200 in the table. I tell you that normally the situation is the other way around, and is once again, as I stated at the very beginning of the video, at this point, take the money and run. Okay, so with that, the only thing that remains on my side is wish you very good trading and see you in the next episode.